Good afternoon, everyone, and welcome to today's webinar. I'm Allison LaForgia, Managing Editor of the Content Studio at HousingWire, and today our topic is Smarter, Faster, Safer, Reimagining Mortgage Underwriting with AI, presented by Sutherland Global. Now, before we dive in, I want to start with a few quick housekeeping notes. If you have any questions that you would like to send to the panel, you can drop them in the Q&A and we will make sure that Sutherland's team gets back to you. Today, I'm really excited to jump into this content. It is a really exciting flow, but I want to start with introducing our subject matter experts who are joining us today. So let's start with Randall. And Randall, can you please introduce yourself?
Yeah, absolutely. Hi, I'm Randall Garland. I am SVP, Head of Mortgage Credit for Next Bank out of Dallas, Texas, celebrating my 30th year of mortgage credit this year. So lots and lots of time on the desk underwriting. Hope to bring as much information as possible to this call and to this webinar.
Thanks, Randall. And now let's jump over to Joy.
Hi, everyone. I'm Joy Zeminskis. I am the Director of Sales and Business Development for Calyx Software, the OG and mortgage LOS origination software.
And now let's jump over to Hitesh.
Hi, everyone. I'm Hitesh Karwa. I had the mortgage solution and transformation at Sutherland. Close to 2 decades in mortgage industry. That's what I did. Still loving the hustle, from a loan officer to a consultant to a digital practitioner. Happy to be here.
Thank you, Hitesh. And now, last but not least, we have Andrew.
Hey, everybody. Andrew DeGood. I'm the CEO of Ask Bob AI. We focus on knowledge agents that don't hallucinate and operate at a 99% plus accuracy rate. I spent about 20 years in the secondary market around mortgage-backed securities before transitioning to the wonderful world of tech and AI in 2022.
And now, without further ado, I am going to pass things over to Hitesh to start with today's content. Hitesh, the floor is yours.
Thank you so much. Before we deep dive into today's topic, just want to give a brief overview about Sutherland Mortgage. The lens through which we look at Sutherland, there are 3 layers, there are 3 horizons that we technically work on. The functional transformation, that's the core foundation to our business, which is our domain and our talent expertise of servicing originators, services, third-party reviewers for more than 2 decades now. We leverage that domain with Sutherland's enterprise-wise platforms, which are verticalized, to provide operational efficiencies and reduce technical debt. And then we include the whole ecosystem where we partner with companies like Google, Microsoft, and more specific tech companies like Calyx Path. Joy is one of our partners. We bring everyone together, the domain, Sutherland tools, and our partners together, and then design what the future transformation looks like. On a brief, that's what Sutherland does from domain and from transformation. We can now move to the topic of AI in mortgage origination. Now, as we are aware, the last few years have been, we're seeing lean inventory. Typically, everyone is chasing the same borrower. The competition has intensified, and the rise of fintechs are challenging legacy platforms and processes. But AI, in fact, has been there for quite some time now. If we go to the next slide, here are some data points. We've seen machine learning, helping with some credit scoring models. The last 5 years, we've seen chatbots, a rise in chatbots for answering customer queries. In fact, 3 months back, Fannie Mae came out with a fraud, AI fraud solution. They partnered with an AI platform, which means that AI is definitely a game changer if you don't look at it as a magic. Right? If you look at it as, I would say, a car that has cruise control in it, where you are at the driver's seat, it's not a self-driven car, then probably it's a game changer. I would, probably turn this over to Andrew, who lives and breathes AI, to get your thoughts on that, Andrew.
Yeah, no, actually, I'm stealing that, Hitesh. That might be one of the best explanations I have actually heard when it comes to that. And I think that is the biggest thing that we're seeing right now. I've just come out of a few different conferences speaking on AI and hearing others talk on it. And I think for right now, the biggest piece of it is it's the lift, right? So the cruise control example is kind of perfect here. We're seeing companies out there like a Trained who's doing it, an 80% lift, right? When it comes to document processing on the underwriting side, we're seeing companies that are doing voice coaching, to assist, their LOs and anyone else in their call centers, seeing the advent of knowledge agents, which are allowing for information to be accessed at a much, much faster rate within the space. But ultimately, at the end of the day, we still have that human component, right? I think the doom of AI is going to take all of our jobs is very much an overhyped thing in the media. And the reality is this is a lift, not a replacement.
Absolutely. Completely agree with you. I mean, it's going to augment the processors and, provide that lift. I mean, it would be interesting to hear, Randall, from you from an ops perspective. I know technology adoption can be emotionally exhaustive with so much information flowing around on AI. There's a lot of pressure, AI pressure, I would say, from an ops perspective. So as from a bank perspective, right, and you heading the credit division, how do you look at AI?
Yeah, I think, I'm probably a little less conservative than some in the banking space. We obviously have compliance and QC that are involved with concerns about security and what AI will look like in the landscape of banking as it applies to compliance. From our world, I think, to your point, it's very much an assist type role for us, at least in this current landscape, as we get our hands around what AI will look like. What is the security of AI? How does that grow our business, and what risk does that pose for us in the new space? Today, what we envision AI being is more, as you mentioned, an ability to scale without adding extra headcount to that volume, especially as we potentially look at a refi boom, if you will, as rates are proposed to come down even more through the rest of this year and into next year. We look at that to say, hey, what could we do different than we did in the previous refi booms? I think the equal for us is AI. If we could have a technology that indexes our files and grabs or collects the data, scrapes the data from what has been indexed, and then starts to fill in the blanks that somebody manually would have to do, that certainly creates a lift, and it creates an ability for us to scale our business. What happens when the technology can't read it, or it's just a bad copy, or on and on and on? Well, there's where the assist comes in, and so to your point, I don't think in the current environment it would be a complete elimination of humans for sure. I definitely think that humans will have to have a touch in it at some point, at least in our current environment.
Completely agree with you on that. I think if we're talking about AI, we have to talk about the tech stack on which it will be built on, right? The loan origination system. How do you look at it, Joy? Being a platform company, so many fintechs coming up with point solutions, and having AI solutions being on top of LOS to enhance productivity.
Absolutely, and this has been top of mind for 5+ years, and we have native cloud solutions available, but the technology piece is so critical, and building it out to a spec that makes sense is really the priority. And what I mean by that is we have companies who, and I think you mentioned it earlier, is it's not magic, it's not an instant fix. It takes time, and you've got to build it out. Because what we found is, as we offered this automation, some clients would be like, well, wait, we don't want that to be automated. We want that human element to pop in and prove things. And, they want the efficiency, but not at the sacrifice of accuracy or compliance. So it is a phase where we're in the baby steps phase, in my opinion. I do not feel that we're going to eliminate humans, but I do think that there is a need to make things efficient, faster, and even more accurate, and lower that risk. And that is at the forefront of our work right now. It's just continuing to build that out where it makes sense.
Thank you for that point of view, Joy. Mm-hmm. Absolutely. I think, we're seeing a lot of discussions with customers, and we always tell the customers that it's not going to completely overhaul your operation. There's no secret sauce. The secret sauce is how you approach it, the strategy that you apply to it, right? That's exactly what makes a difference, because every organization, be it a bank or a non-lender, they have AI in some form or the other. But it's how you use it, where you use it, is going to give you the ROI. We can move to the next question. What does autonomous underwriting really mean? I think of lately, we've seen a lot of companies talk about different AI types, AI maturities, being an assisted AI from an assistant AI, helping with some content, like, for example, chatbots giving responses to humans who would review and then respond to the borrowers. Augmented AI, automated AI like RPAs, content summarization, and there are other AIs which technically pick up certain pieces and make the decision. How these things come together to help the entire lending life cycle, be it fulfillment, be it servicing, is something which lenders and mortgage industry is looking at. So technically, it's like a twin brother strategy. One brother looks at automation, the other one looks at the human, right, who looks at the expertise. And if I have to put this in the underwriting context, we look at it as, let's say, document classification, that indexes the document, gets the data out, runs the rule, does the income calculation, and the judgment part is being left to the underwriter. So this 80-20 shift technically can start with 50-50 first, to give underwriters some confidence that, hey, these non-core tasks that you're going through the piles of documents, you don't have to do that. There are certain automations that can take care of it. And eventually it goes up to 80-20, where 80% of the work, the low risk work, that the underwriter can, keep it at the for the AI to automate, and focus only on, rather than being a gatekeeper, be a strategic analyst, right? Focus on the judgments, focus on the quality of loans, focus on fraud and other things, is what we are seeing in the market, and different AIs platforms that we've gone through are coming up with this strategy. Any points, Andrew? How do you look at it? Be an AI organization, the different AI maturities in the market.
Yeah, I think the biggest thing, and you just hit on it, is we're taking away, slowly but surely, those activities that just, quite frankly, didn't make sense. I actually started out as an underwriter a very, very long time ago. I still had hair, and files were paper. And so, we would sit there. I feel like maybe Randall remembers this too, where we would do the stare and compare, right? Like, I remember being in like places and having a loan file sitting in my lap, right? And when I was doing all those extra activities, that really took away from my bandwidth and my capacity to truly look at what was going on with the file and to truly understand where the risk was, right? So as we begin to remove those things off of the underwriter's plate, right, now their bandwidth, because we only have so much bandwidth, each of our individuals, right? It's famously why Steve Jobs, wore the same outfit every single day. And so I think what this is going to actually do is just increase the quality that we're getting from the underwriting side. I think also there's going to be an employee satisfaction component here, right? Because underwriters specifically are going to be able to focus on the things that they want to focus on. So maybe those cookie cutter loans, that it might be something that we see that gets, to a, 90-95% automated underwrite with a final check mark, but I'm not spending time having to focus on that much more basic file. The other piece, and you touched on it, is the ability for employees to access information a lot more quickly is going to reduce the number of questions that are coming from other personnel within the organization to the underwriter, right? As we're seeing the emergence of underwriting scenario desks and AI, as an example, you no longer have context switching. There's actually a really interesting study out of the University of California, Irvine, that shows that the average time to refocus a knowledge worker when they've context switched is 23 minutes and 15 seconds. Now that's the average, but there's a significant cost to all of these originators when you're having to do all this context switching in and out. So I think you're going to see higher employee satisfaction. You're going to see, reduced cost and just overall better quality.
Absolutely. Now, no two loans are the same, and I'm sure Randall, you'll agree with me on this, that even if there are two colleagues who are working on two separate borrowers who are buying a property on the same street, it's a different loan altogether, right? The credit score might be different, pay stub, the income, bank statement, asset, everything changes. So from an underwriting perspective, do you think underwriters would have that confidence, where more than 50% of what they're doing currently has been automated and they can trust AI and the output that comes out of it?
Yeah, totally. I think speaking to Andrew's point earlier, we did grow up in a time where paper files were the way that it happened. And I distinctly have a memory of going into one of our customers' offices with not now, this was about 20 years ago, but went into a customer's office with their sales associate, and we were trying to get their business. We walk in, and on the top of everybody's desk and processing was a light box. And they could turn these light boxes on, put down a signature, and then stick another piece of paper on top of it and perfectly forge the signature of that borrower or of another off of a VOE or what have you. And so with that, burned into my mind the concerns that we have about fraud and what misrepresentation looks like in our current environment. I use the saying that says, desperate people do desperate things. So from an underwriter's perspective, I spend a lot of time really analyzing the document, looking for inconsistencies, looking for font changes and signature changes and things that are not consistent throughout the loan. Things that I don't have time to do as an underwriter, because we obviously have a lot of loans to get through, is I don't have the time to sit on a bank statement and take every debit and every credit and add and subtract them from the beginning balance to make sure that that ending balance really is accurate. Like, we don't have the capacity to do that. So from an underwriter's perspective, in a world where AI could take off of their conscience, I guess is probably the best way of saying it, that there could be fraud in this file, and I need to evaluate every single document for inconsistencies and catch the misrepresentation, would certainly provide a lift and certainly allow us to get through loans a lot more quickly.
Absolutely. Since you touched on fraud, I just remember the CEO of Fannie Mae quoting that it took their fraud investors 60 days to detect fraud versus the platform detecting it in 10 seconds.
Yeah.
And I'm quoting her. She's actually made that statement, and which is like great. So I mean, especially in underwriting, if fraud is detected real time, if AI can check documents and say, you know what, the name is different. The borrower has submitted a pay stub which has an entity where he's worked for 2 years. But when we do a LinkedIn search or a social media search, right, he's joined somewhere else like 3 months back, right, claiming to be a primary residence, but he already has another property somewhere which has not been caught, and AI does that quickly. Of course, there are other sides to AI as well, where it can probably categorize borrowers based on the patterns that it has been trained on, which definitely, that's where human comes in play. And, you don't leave the decisions to AI. You let, the human do those decisions. Joy, how do you see this playing out, the entire shift in AI maturity?
Well, I will tell you, as we're kind of looking back a little bit and reflecting, and I started in 1998. I know that's been a long time, so I'm dating myself, but in loan origination, and then evolved from there. And I've seen the industry, and the word evolution is really the best word, because I remember those paper files. I remember the checklists on the front of the file. I remember exactly what we were talking about as far as the stories of people copying signatures and so forth. But I also have seen that same evolution in such a beneficial way when it comes to the sticky notes on the files. Now we have this, all these technology advantages where we're not using paper. We've gone to paperless, and now we've saved time in just handling these files, and it's all electronic. It's all online now. And then we're moving to the cloud, and maybe there's a instead of a manual sticky note somewhere that also compromises the integrity of the file or the privacy of the borrower, where it's all in your system. So it makes the review of the file cleaner, more efficient. And then as you automate things like underwriting conditions, automating fees, all of these things give that underwriter an advantage to skip past the mundane tasks and that Andrew was talking about, and really focus in on the depth of the file. Things that AI can't necessarily see up front, the full picture. Maybe they've been on their job 6 months, but they didn't see that they were a student prior to that, and that may be a compensating factor under FHA. So there are a lot of details to a file that I'm not sure that we're ready for today with AI, but at least it can get through those tasks, the mundane check marks that take the majority of the time when underwriting a file. So I can see it really progressing. It has since I started in the industry, and now looking forward where it's going, it is exciting. I think that we're going to be able to, these borrowers are going to be able to get their into their homes much faster. And I think that's the goal. And that's an exciting thing.
Absolutely agree. Absolutely. I think, yes, I think before, jumping into AI solutions for underwriting, or maybe, across the landscape, it's important to take a step back, and like you and Randall and Andrew mentioned, to take a step back, understand what problem are we trying to achieve, and then see, once it becomes very clear that, okay, we're trying to solve a document problem here, we're not getting clean data, because without clean data, right, what models are we going to run on? So where do we need to intervene first, right? Fix that issue, then move to another set. But just one question, Andrew, that I have: do you think it has to be perfect before you run AI, right? Or should we, like, pick up small pieces and try to master that before we? What are your thoughts on that?
Yeah, so I think I have a couple of thoughts on it. Number one, I think it's definitely a crawl, walk, run situation. And I think Joy pointed out something really important that I love that you guys are doing over there, which is, every mortgage shop is slightly different, right? And everybody is going to think about things a little bit of a different way. So the number one thing I would say is technology partners, when it comes to AI, we need to make sure that it's flexible. And that we're willing to meet, the customers where they're at today, and what they want to do. I have lots of conversations with different lenders every single week, and I'm amazed at how big the spread is in terms of, sort of how they're looking at it, right? So I think the accuracy level really depends on what are you trying to approach, right? Are you very early on and you're just using Claude or GPT to help, people, role play in a sales aspect? Are you looking to help, rewrite emails or things of that nature? Well, that 88%, 92% accuracy is fine. If we're looking at an underwriting scenario desk or an underwriting knowledge agent, like you need that to be at 99%, right? I'm sure Randall's over there. He's like, I'm not taking 8% wrong on my guidelines, right? From that perspective. And so I would say, does it need to be perfect? It really just comes down to what is the solution that you're trying to solve. But I would say to folks, really start off with something that's internal, and that may be a small step. So that could be something like I mentioned earlier, like a voice coach. That could be something like a knowledge agent, or it could be something, I've even seen folks who are looking at like, I have to have everybody checking the property address on the appraisal against USPS. And I just want to automate that whole piece and I want to let it go. Right. And that's one that's, again, is fairly simple. So I definitely think it's a crawl, walk, run. And I think you just really need to look at, what's your risk appetite on the problem that you're trying to solve for.
Absolutely. Thank you so much, Andrew, for that. So absolutely, yes. I mean, we see it can definitely augment underwriters with a different approach. It can be 80-20, it can be 60-40. It all depends on what we're trying to achieve with AI, and it's happening in the market. So thank you so much for your.
Sorry, Hitesh, there's one thing I just thought about that I do want to add is I think it's important to have conversations internally. Joy kind of touched on, you're looking for what is the problem that I'm trying to solve, not just inject AI to inject AI. And oftentimes we find that there are things that folks are looking for that actually we probably could have built 10 years ago. Because it's not necessarily AI, but it's good. I think it's getting the industry talking and thinking about it. But I would also really encourage folks, have conversations with your underwriters, have conversations with your processors, your closers, ask them, right? Like, what gets in the way of your job on a day-to-day basis? Because you're also going to increase your adoption much higher if you're coming in with a tool that's helping them and that they understand and they see where that value is.
Absolutely. Getting compliance and ops early on in the business, understanding what challenges are from an ops perspective, compliance perspective, definitely will go the long way. And there are certain things which technically you can take care in the processing side of the business before it reaches the upstream to underwriters, right? So it's not just underwriting; it's the downstream processes where we can look at. I've come across certain solutions where a POS technically sends back to a borrower asking for a letter of explanation, right? The processor is not doing that. It's the POS that is doing that, where it's reviewing the credit and sending auto email to the borrower saying that, hey, you know what, I only have 4 documents of the bank statement, and 4 pages of the 5 pages that you claim that you have sent for a bank statement. So majority of the work is done at the downstream processes before it reaches to the core underwriter to actually go or processor go and review and give an update or probably an approval. So absolutely, I think involving processors, and other roles at a very early stage is definitely going to help and uplift productivity across underwriting. Thank you, Andrew, for that point. So, I mean, I would say, you look at it as AI as a tool rather than AI as a driver. If I have to sum it up, right, where you look at certain processes to enhance this, and how are underwriters' role evolving? I think we have touched on this, but we can still go through some use cases how it can help underwriters. Like if you go to the following slides, we've listed down key things that they can really focus on, right? That 80% that we spoke about, the twin brother strategy that we spoke about, to what percentage, when lenders are shifting from being, a checker, maybe, from operations to innovation, what are the things that they need to look at, um, and how it's going to help the other persona. So document is one thing, right? Getting the right data out to underwriters, running those models for income, checking information on bank statement if there was any heavy, large deposit, before the application was filed, to check, the source of that income, checking fraud. If all these things are taken care by AI, so what is left with underwriters is technically focus on being, a strategic risk analyst than just going through all the details. So definitely, it's going to give a shift to the underwriter. Or I don't know, probably technically an underwriter today, Randall, would be doing what, 2.5 to 3 files, fresh files a day. Is that accurate? Somewhere close?
Yeah, I'm sorry, you cut out on me. I couldn't hear you at that point.
I think today an underwriter would probably do 2.5 to 3 fresh files a day. Is that correct?
Yeah, absolutely. Yeah, and then depending on the space, right? If you introduce non-QM or you're introducing a portfolio product that has a little bit more strenuous guidelines, that could take a little bit longer. So you could be looking even at 2.5, depending on the complexity of those loans.
Absolutely. So I think definitely with AI, it's going to give lift to their productivity. It's going to make them more predictive than being reactive, because some of the work would be done at a fraud level or income calculation level, or checking some of the data fields from an appraisal. All that work would be done, so they can focus more on being more proactive than reactive. It definitely will make them, I would say, a knowledge, hub or a knowledge worker, than just going through a checklist and chasing the volumes, right? Making sure that there are zero buybacks that are coming, and there are no errors that are coming in post close, right? Usually, all the work which is done, from a QC perspective, although we say it's probably pre underwriting, but majority of the QC errors are caught in post close. So if there are AI QC built into the system that helps underwriter create those templates, understand, from a document, from a credit worthiness perspective, it definitely, we feel it's going to give lift to the underwriter. So the new role of an underwriter would be more towards the strategic side, is what we feel. Any comments, Randall, and from your side?
Yeah, no, I completely agree with what you're saying. Totally agree.
Perfect. And we are not replacing the underwriters here. I mean, in the overall approach that we focus so far, there is no replacement, right? Because humans, irrespective of whether it is underwriting, processing, has to be there. That's the base of all the models. It's just going to enhance their productivity. It's going to augment their role, shifting from doing all the manual tasks, and leaving it up to the OCRs and the NLP of the world to do those kind of tasks.
Yeah, I totally agree. And to sort of tag on to that, we know in our world, 1 + 1 = 2. But sometimes the file is not that black and white. Sometimes a borrower scenario cannot be interpreted by a guideline that's written in black and white. And that's what we always refer to affectionately as the gray areas. And our interpretation of the risk in those gray areas is really where I can see that human underwriters will have to get involved. As AI is introduced more predominantly into an underwriting space, we have to teach AI what happens in those gray areas and what determined that it was a gray area, what said that that borrower circumstance made it okay, even though something in black and white could have been interpreted as not okay. And so I think that's definitely where the human aspect has to be involved, and our knowledge, our skill set as empathetic humans that understand circumstances and have experienced our own personal circumstances in our lives, have to train an artificial intelligence what that looks like and how that becomes a reality in our current world.
True, absolutely. I mean, yes. And if the models can predict delinquency and default at a very early stage, that's a game changer again, not just for an underwriter, but for the organization as a whole, right? You're detecting things um, at a very early stage, which really helps the underwriter, take that call quite early in the entire process. And the touch rate for an underwriter definitely improves with these AIs, right? It'll never be like a 3-touch or a 4-touch file. We can look at maybe at the max 1 or 2. And that's where the productivity lift of 2.5 to 3, depending on the loan type. Like we said, non-QM probably would be more manual, so it takes more time. But an underwriter may be looking at 4 files, 5 files. That's definitely going to give a lift, because when the volume goes up, you don't have to hire people and then fire when the volumes are low, right? These automation. That's why I say it can be overwhelming at times, but at the same time, if we use them at the right place, it will definitely give us lift when the volumes are high, right? And underwriter being, the most expensive resource across origination, I think some lift will definitely help from the P&L perspective as well.
I do want to add on to Randall's point. I think one of the most important things to remember about AI is it has no viewpoint, right? Like we talk about, someone talked about this on LinkedIn the other day, where they were talking about how, the current version of GPT can pass the, CPA exam or whatever it is, like 99%, right? It's smart, it can do a lot, but it has no viewpoint. And so to Randall's point, when you have those loans that have compensating factors, I remember trying to automate compensating factors. Randall will probably laugh at this. Several years back, and we just threw our hands up. We were like, it's literally impossible, because there's just so many scenarios, and it requires that human intervention who has that viewpoint to look at all of these different things. Because the reality is, we'd love to believe that our industry is black and white, but it's not. It's just a whole bunch of gray. And so I just don't see the underwriter ever being able to be replaced entirely, because you're always going to need a human in the loop to handle those scenarios.
I totally agree.
Yeah, absolutely. And the early we involve underwriters in the automation process, the better for the organization as well, for the models to be successful. The way documents have a confidence score, the same way I think humans, when they work on new technology, want to get the confidence score, how good the system is, am I getting the right result? Otherwise, I mean, we might deploy a tool, assuming that it's going to give lift to the underwriter, but the underwriter is, still doing everything manual, not trusting the system, right? Because for any system, for any deployment, it takes time. It takes time. It takes time to reach to that accuracy level. You probably start at 40, eventually go to 60, 80, and then maybe, reach that level where an underwriter will say, you know what, this section, I know it will be accurate. I've seen it grow over the last 3-4 months, the accuracy going up. So the more we involve, underwriters or processors in the entire automation process of how things work, I feel, and that's what we've seen in some of our consulting engagements, it gives better results. In fact, during the course of the deployment, there are a lot of changes that have been brought up, not just from that persona, but different personas on how to make it better. Because we look at that particular function from an automation perspective. But when we involve different personas, we get to know that, oh, this is the challenge that happens at the upstream process when the file goes to a closer. This is what the processor is facing an issue, and that's why he's not able to fix it, but just pass it on to the underwriter. The underwriter is again going to send it back saying that, conditions on the file, I don't have this. So that helps a lot. So definitely, it is going to help the underwriters, and the new role of the underwriter would be much different than what the traditional role has been so far.
And I'd like to add to that, Hatish, is that we're going into this assuming that these individuals are willing to change. And what I have found in my experience is that there is an adoption rate component to be considered. And I see these customers, these companies who are like, let's go to the cloud, let's go with this automation, let's innovate this technology and this tech stack. But then when they are introduced, and a good example of that is going from a form-based software to a data-driven software, and they're so comfortable with, even in, gosh, I think it was 2015 when lenders were asked to move from paper files to paperless. And so we were making that shift, and I'm still seeing customers who even today still prefer those handwritten files. And it's shocking to me because I'm like, that was 10 years ago. But that adoption rate is a real thing and has to be considered, because once you introduce this new technology in this new way, no matter how efficient it may be, it's really hard to accept it, adopt it, and start the practice and to move forward with it. Another example is that we have automated conditions and fees and validation checks. And yet you might have a customer who says, but I like my Excel sheet that is my manual checklist. And so it's really hard for individuals, intelligent, really great at their job individuals, who can grasp or just let go of those comfort zones and where they have that control and they can be sure that that file's, crossing all the T's, dotting all the I's. And so that adoption rate is definitely something to consider, and applies back to what Andrew said, the crawl, walk, run phase. We're still in that crawl phase from what I'm seeing with lenders and individuals. And it is hard to make a change. It is hard to accept these things, but we are making progress and we're going to get there. But I do still think we're in that crawl phase.
Absolutely. That's a very valid point, I would say, right? Change management. I mean, for me, it's like a silent killer, right? For AI adoption.
Yeah.
Data being one, having the clean data to run the models, but then the change part, Joy, that you touched on, that's why I think we see the adoption rate. It's less. A lot of the organizations fall in the more than 50% bracket who are in the trial phase, right? They're thinking of it, of deploying. Some are still thinking whether we should use OCR, ICR, follow the same paper-heavy process. So
Right.
yeah, I think that makes a big difference, right? Adoption, and what we've seen, in some of the consulting engagements is the success depends on more on the strategic part than the operational. The failure is very rarely on the operational side. It's more on the strategic side, right? Taking that decision that yes, we want to implement this in a particular way, and how do you want to implement it, right? Rather than just staying neutral, like what we do, we don't know, and half of the organization wants to apply AI because, like I said, it's overwhelming. You read about AI everywhere, and then you hear these big names who are using AI and having a cycle time of 10 days and 15 days. Then as an organization, you feel, what is it that I'm not doing right? Why is it taking me 35 or 40, 50 days to close a loan? But I see, the top lenders is closing it in 20 days. And that's when the pressure starts building up, right, Randall? Correct me if I'm wrong.
Absolutely. Well, and I think too, speaking to Joy's point, a lot of lenders today, we're fighting for the same loan. Lenders are all going after the same loan for the qualified borrowers. Borrowers are being challenged in qualifying because DTIs are high, as the rates have been high, creates challenges for qualifying. And then to that, so we're fighting over the same loans. Well, margins are low. So you have less profit happening within companies. So then they have cut headcount because volume is down. And then we introduce factors like AI that says, well, you could have less headcount because you could have the lift from AI. But now we pose the question of how do I implement that when I'm just trying to get through the loans because we have less people. So I feel like there's probably, as a company, there has to be a priority that is placed in AI for the lift that you will eventually get by having it. And probably why we are in that crawl phase being because there are no resources to throw at AI and get it implemented effectively in the company model. So that's definitely one of the challenges I could speak to today. We do not have a plethora of project managers on staff. So how we would implement and how we will implement AI in our space has to be factored into everybody's current day-to-day business and what they have to get finished in their business. So unless somebody amazing like Sutherland comes along that creates an avenue for AI and helps us with that lift, then certainly, it becomes a challenge, and probably why I feel like we are more in a crawl phase. How do I get it going? How do I make this start and happen?
Absolutely. Andrew, do you hear that? I mean, when you're discussing, AI in these conferences or with your customers, do you see the same challenges?
Yeah, 100%. I mean, this is the first technological revolution where we anticipate everyone to suddenly be a CTO. I spoke at the New England Mortgage Bankers Conference 2 weeks ago, and there's, I don't know, maybe 120, 130 people in the room. And I asked, how many of you are from the technology department in your company? Two people raised their hands. That means that every other single person in the room was in sales or operations. And that really should say something, right? Because if 10 years ago we were having a talk on, cloud-based technology, there wouldn't be any ops or sales folks, that are showing up into the room. So I think it is critical. Right now, what I recommend to a lot of folks is when you're looking at AI vendors, look at AI vendors who have a track record of being in the mortgage industry. People who speak the language, who understand the processes. And I don't mean to, there are a lot of really brilliant people who are coming out of San Francisco and New York with some great ideas, but the struggle is, and it's just the reality is they don't speak the language necessarily. And so it does take a little bit more lift from someone like Randall in trying to get that implemented on that side. I do want to add one thing around adoption, and this is just our philosophy, and we didn't come up with it. I stole it from Simon Sinek, so he gets all the credit here. But what we really try to do with our organization or with our clients or recommend is let's find a few early adopters within your organization, and let's do a proof of concept, right? We'll do a free proof of concept with those individuals to get them really excited, right? Because those are the people who are early adopters. They're going to get excited about new technology. And then once they get it implemented and they start using it, then the sort of the fence sitters, if you will, all of a sudden start watching the early adopters and they're like, ooh, I want that. That looks really cool. And the next thing you know, you've got 60 to 70% of your organization using this new tool. And inevitably what happens is the people who are, the more difficult to adopt suddenly get jealous of the other 70%, right? And they're like, oh, I want that toy because everybody else has that toy. So I do think that's another kind of crawl, walk, run when we're talking about the people within your organization to really help with that adoption. But also it helps for you to prove out the ROI, right? When you're looking down and seeing each group adopting it through the process.
Thanks, Andrew, for that insight. Great. I think good days for underwriters. If we move on to our next question that we want to touch on, which is, can AI make compliance effortless? Right? We purposely put this question because there's so much that's been written. Now we understand that AI is rapidly reshaping the mortgage landscape, and um, effortless, I think, is an aspiration. Is what we feel that it's an aspiration. But webinars like this, I think, it's going to help us understand, and those who are listening understand that how close are we getting to to the effortless part of compliance. Does it really help compliance in a way? It does. We have to wait and watch and see whether it is effortless, or what shift that it helps. How much of an effort will it reduce dramatically, will help institutions stay ahead of regulations. um, as we move to some data points, we've seen some studies where organizations are adopting AI in compliance. Again, going back to the point that taking a step back, understanding what is required, who do you involve from the initial phase, what governance model do you set to review this, because you again don't want to be have a situation like, for example, if a borrower is denied a loan and an AI is sending not sending an explanation to the borrower why it was denied, would probably put the lender into a fix where you're supposed to give an explanation on why. So you don't want to leave certain things to AI from a compliance perspective. You still want humans to focus on those critical parts. But yes, AI can definitely help in getting the red flags on fraud when it comes to document identity, data, and help the compliance department to fix certain things. And it be more proactive again than being reactive after the loan is closed and then trying to do a due diligence. Because in mortgages, what I've seen, is after every step there's a QC. Right? When the processing is done, there's a QC. Before the file goes to underwriting, there's a QC. After the loan is closed, we do post-close QC. Once the loan is sold out, correspondent, there's another QC. Then you have those third-party review sites. So the QC, which is happening again to make sure that you're compliant. So definitely from that perspective, AI can provide that lift, help you be in the green zone with the regulators, make sure that you're not an outlier when it comes to trade and and other regulations that you have to follow. And I would love to hear your point of view when it comes to compliance. What are your thoughts? I mean, and this not necessarily in origination; it can be across the life cycle. How do you see AI, helping compliance?
Yeah, so it's definitely not effortless. And AI is definitely not going to replace compliance or attorneys as much as we may wish. As much as we may wish on that one. I think there's a lot, but I do think there's a lot of applications here. I do think, one of the things that even I've leveraged it for on the compliance is to better explain regs to individuals within the organization, right? These things can be incredibly difficult to read. The lawyers do that on purpose, so then you have to hire them to read them back to you and explain it. So that is one way that I think we're seeing it when it's leveraged. On the QC point, and I'm actually going to get away from AI on this one for a moment. You're coming from the third-party review world and mortgage-backed securities is eventually we need to move to some sort of a blockchain when it comes to these QC processes, Hitesh, because you're 100% correct. These loans are just getting QC'd over and over and over again. And it just, I think that's a big part, a big opportunity for someone to really make a splash in the industry if they can solve the problem. Because it's extremely costly, right? And the question is, again, coming from the secondary world that I always had is like, why do we wait so long? Like, why do we wait so long to find out if a loan is securitizable? We're waiting until, 3 days or a week after the loan actually closes. And then we're shipping it off to a due diligence firm to now do a complete 100% re-underwrite, to then send it off. And then if the MSR gets sold off of the loan, now it gets reviewed again. And then if there's an aged asset trade, it gets done again. If the securitization gets re-levered, we got to look at the file again. And it just doesn't make any sense. And I think moving, again, sorry to get off the AI component here, but I think moving to some sort of a blockchain, which some folks are starting to do. We are seeing that slowly but surely. Liquify is a company that's involved with that in the securitization space. I think that's going to help to significantly reduce that. Now, all of that being said, I do think from a compliance perspective, other applications of artificial intelligence will definitely start to pop up, where, again, we're able to run maybe some of the fraud checks that traditionally have been very manual. And as we're collecting all of that data, we can leverage AI to do the data comparisons to run for those quality checks, right? Because honestly, a lot of times that's what it ends up being. It's just getting to that step of, I think, the unmutable data.
Thank you. Thank you for the insight, Andrew. Would be interesting to know, Andrew, from a bank's perspective, the way you look at compliance. Do you think it's more manual? There are some, and not necessarily AI, right? It can be other automations as well that help. How do you look at this?
Yeah, I completely agree with what Andrew said. Obviously, from a banking perspective, we pay, right? So we have underwriters that we pay. Then we have QC that we pay for pre-funding QC. Then we pay for post-closing QC. And it could have been in the random selection of files that's required by the GSEs. It could be that the loan that was PFQC that I've already paid for is now pre-funding QC that I'm paying for again. And then in that, when I go to sell my loans, an aggregator is going to re-underwrite it and QC the loan. And then if I sell it secondary, Lord help me that the GSEs are now auditing the file, and they are using AI technology that we did not have available to us. And so now that QC looks completely different. So to Andrew's point, from a banking perspective, we pay a lot of money in diligence, And so to have an industry, let's just say as a whole, that gets our hands around a technology that can be trusted and affirms the information in a quicker period of time, could we then scale back on some of the other areas of QC that's happening? What happens when a diligence firm is known well and has a great reputation across the industry, and they can do a review of my loans, and now I sell that loan to any investor on a reliance letter? How could AI not work in the same, could AI work in the same regard that would cut costs for us as a company, as a bank?
Thanks, Randall, for that insight. Yes, so we all agree, and absolutely, it's not going to make it effortless, but definitely it will provide some shift from a process efficiency perspective, make life really easy with regards to catching fraud a little early, getting the right data, clean data to be submitted to the regulators on time. So I think we've covered the applicability of AI, the use cases on how it can be deployed across origination. We've discussed about the different AI maturity levels on what types of AI can be used, from machine learning to Gen AI, in which areas, maybe chatbot, income verification, and others, how it's going to impact underwriters and their role, how the new world looks like, and does it have any meat in the compliance part of the section, which is critical. Now I think it's more on how do we deploy that, and I think we all have spoken about the crawl, walk, and run phase, and technically that's the framework that Sutherland uses. be it for AI, be it for any technology. That's the framework that we start with. That we want to first, understand the use cases, pick up, a low end task where we see ROI. We get the compliance, the ops, all the teams together from from the beginning to make sure everyone is aligned to that. We pick up maybe, I would say, income verification kind of a process or a fraud detection kind of a process, pilot it, right? Test it, see the success of it, right? You might fail, but again, that is needed in the crawl phase. So you pick up low-end processes, work on that. Maybe a chatbot to start with, if it's not there, and then see, how you can implement that when you go to the walk phase. You probably give more authority to the AI. You add Gen AI to the chatbot that can help the borrowers upload documents real time, detect if it's a blank page, it's a utility page, is it really a pay stub? That's the next level of work for you. And then figure out if you really want to go in the agentic way, right? Have you been confident enough to use cases that are giving you ROI, right? And then move on to processes that will benefit you. So definitely, that's the framework that we follow, and I think that's what everyone has resonated on the call. That crawl, walk, and run is the way forward. And the industry right now is in the crawl phase, is what my perspective would be. But I would like Andrew to second that, or maybe add your points on where do you see the industry when it comes to AI, from a call phase, from a walk phase. Because when we read reports, we get to know that, oh my God, there are certain lenders who are in the walk phase or in the run phase, but are they actually in the run phase? And if they are, then why is it not being replicated by other lenders? So where exactly, from your conversations, Andrew, where exactly do you feel the industry is, and how fast is it progressing with AI?
So it's definitely in the crawl phase. And if there's nothing else that people take away from this webinar, you are not behind. There are, first of all, AI is not magical fairy dust. There is no shortage of headlines that I question, especially being deep in it every day. It's hard, right? When you look at, the people who are doing, things in the AI space from technology partners, they're very all of us are very hyper focused on a niche, right? And most of us have been around for 2-3 years focused on that niche. So be careful what you hear from particularly publicly traded companies who have a fiduciary responsibility to their shareholders to make it sound really great what they're doing. What I have found from people that I'm talking to, I talked to a top 20 lender 3 weeks ago, and I was like, hey, what are you guys doing with AI? Because I really like to hear where people are at. And they're like, we're looking at voice coaching. And I was like, what else? What are you doing? We're looking at voice coaching. Like, this is a top 20 lender who's done literally nothing. They have not installed anything in their operations. They decided that AI voice coaching is where they want to start. And so that's where they're at. Now, I'm not saying that's where everybody is at, but that should, just give everybody, an idea of where the temperature sort of is from what I'm seeing is it's, we're solving for very small problems. And again, it depends on, the organization, right? Like, do you have the bandwidth within your developer group? Do you not, are you building some internal things? But from what I've seen, everybody's crawling, or they're thinking about crawling. So don't feel like, I always say, like, if you feel like you're behind, you're probably exactly where you should be right now. And I would just say, start having conversations with people would be my other recommendation. For anyone watching this, reach out to, somebody like Joy or Hitesh or myself, or, another technology partner or consultant that and just start to have some conversations, and see, what are different people doing, and what resonates for you as a good place to start in your organization.
Absolutely. Thank you, Andrew, for that point of view. Randall, Joy, any comments from your side on the approach?
I would like to first off say thank you, Andrew, because I feel like our industry really needs to hear exactly what you just said. It is a comfort to know I'm not behind, I'm where I need to be. And I think that as they start, they meaning anyone in this industry who really wants to get to that level and create that space for efficiency, you do need to consider, am I using a flexible, modernized mortgage tech stack? And in that thought process, you also have to consider the compliance that we've talked about, the underwriting efficiencies, even the processing efficiencies. Having an LOS that comes with a POS improves the data integrity and security of that information. So it's really important to be thoughtful of taking those steps. And it isn't always about, getting to that run phase, but let's start here. And I think that's a very important point that you just made. And yeah, I think this call has really been fantastic and just opening our mind and also offering a little comfort to everyone out there, because you just have to take the first step. And that's all you have to worry about today.
Any closing comments, Randall, from your side?
No, I think the only comment I would make is I'm excited about the future. I think that we are certainly on the verge of a new decade of mortgage, and those of us that have been in the industry long enough to watch the decades as they have evolved from pre-AUS days into AUS, and now into, as Joy mentioned, imaged files and doing away with the paper. And now we're in a space of how can we create efficiencies with AI. I'm very excited to watch the current and new generation of mortgage professionals embrace the technology and move forward, hopefully cutting costs, reducing costs for borrowers and the industry alike.
Absolutely. Thank you for that comment. And Andrew, thank you for that comment as well, that yes, we are in the crawl phase, and those who are not crawling should first crawl before walking. Look what you have. I mean, you might want to deploy AI, but maybe you don't have the data that is required for, or you have the data, but you don't have the ecosystem, right? You don't have APIs ready to run the AI models. So there are a lot of permutation and combinations, and that's why you start small, start slow, get the ROI, get the confidence, and then you move forward. So that's the approach. And taking that into consideration, I want to just quickly touch base on Sutherland's underwriting center of excellence. This is something that we've created a year back. We've created a center of excellence, which, if you see, the top part of creating a learning center, giving underwriters a refresher training every quarterly, making sure that those who are working on FHA loans get trained on non-QM, other channels, making sure that you uplift the knowledge of an underwriter or one of the top processes for them to become an underwriter or support underwriting. So the top part technically focuses on aiding the human, right? Enhancing their knowledge, when it comes to the product. And if you see the bottom side of it, it talks about tech. It talks about using Sutherland's proprietary tools for document processing, for in-house tools for deploying bots, or using AI-powered knowledge libraries where you can type a question, get a response from any guidelines, from the agency, internal, external process flows. So what we try to do is we try to get tech and human together, right? And this is the twin brother strategy that I was talking about, that you need to have human, right? nobody is going to replace them. They need to be there for a reason, right? A bot or an AI cannot take away 2 decades of underwriting experience from a human. It's just going to follow a pattern that you are teaching the bot or an AI to follow, right? Like the question, the example that I gave, that if there's a pattern that AI detects a particular segment or section of society, and loans have been declined for them, and if it sees similar pattern and start declining new borrowers, right? Maybe we have to look and what we are trying to teach the bot or an AI to come out with the output. So it's very important that it's balanced, and that's what we try to do with our Center of Excellence, bringing the human technology together, make sure they talk to each other, they understand what technology is, how it works, why it should work, is technically comes from them. Like what to Andrew's point is, you involve processors, underwriters, closers, try to understand what their challenges are. That's what we try to do in the Center of Excellence, which we have, which has clearly given us the lift, from an underwriting productivity perspective. So with that, I would say it was a great learning for me, right? The panelists that we have, I think is fantastic, right? We got to know uh, Randall's view from a bank's perspective. Andrew, he's an AI expert, right? And then Joy from a platform, organization. So all these perspectives, I think, have helped me, and I'm sure those who are listening to help them as well.
Thank you all so much for sharing all of those insights. I do want to touch on a couple questions, and I know that we discussed some of these answers briefly, but I want to reiterate them now that we're almost out of time for today. So the first question that I have is looking back at how AI improves risk assessment compared to traditional underwriting methods.
I can touch base on that. If we look the traditional, and Randall, maybe you can help me here. Checking the income, documents, bank statements, checking the DTI, and then taking maybe a decision. But with AI, there are different parameters that AI can throw. It can look at the rent payment, any utility payments that have been made, get more insights into a borrower, right, which will help understand not just from an income or a DTI perspective, but there are other perspectives from which an AI can help, underwriters take that decision. So that's clearly, a differentiation that I see from what traditional underwriters would look at to what AI can do.
And what would a fully AI-powered end-to-end mortgage approval process look like? And is it desirable? Joy, I'd love your perspective on this.
So I do think that AI plays a part, and I think that we can get caught up in that term AI. But what we have found is when you dig deep and you're working with the client, coming from a perspective of having a flexible mortgage tech stack, is that we ask first, where do you want to insert that automation, those validations? Hence my comment earlier about the Excel file and learning, well, wait, we're not ready to get rid of that. We don't want to do that. So it's like, where do you want to insert that efficiency? And typically it's different for every client, but I think that there's absolutely room for us to improve. We have the automation, we have that available. There's a customer who wants to close a file in 10 days, and I'm like, there is no limitation on that outside of the regulations. You can move as fast as you can, or as you want to, but having the ability to put in the work to think through how you want that workflow to go, and then take the time to help build it out. It's really, as long as you have a data-driven, cloud-based software, sky's the limit. You can accomplish what you're looking to accomplish.
I love that. Sky's the limit. What a great place to wrap today's webinar. Thank you all so much for joining us today for Smarter, Faster, Safer, Reimagining Mortgage Underwriting with AI. A big thank you to our panelists, Joy, Andrew, Randall, and to Hitesh for leading us through today's conversation. HousingWire will be sending a recording out to all registrants. You'll also be able to access the on-demand version on our website at housingwire.com/webinars. Thank you again for joining us. We hope to see you all again soon.
Thank you.
Thank you, everyone.
Thank you, everyone.
Thanks, guys.